Ladies and gentlemen, good day and welcome to JK Tyre and Industries Limited earnings conference call hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Chirag Jain, Deputy Head of Research, Emkay Global Financial Services Limited. Thank you, and over to you.
Thank you, Samarth. Good afternoon, everyone. On behalf of Emkay Global, I would like to welcome you all to the Q2 FY26 earnings conference call of JK Tyre and Industries Limited. Today we have with us the senior management team represented by Mr. Anshuman Singhania, Managing Director, Mr. Arun K. Bajoria, Director and President International, Mr. Sanjeev Agarwal, Chief Financial Officer, and Mr. A.K. Kinra, Financial Advisor. We'll begin the call with opening comments from the management team, followed by the Q&A session. Over to you, sir.
Yeah, thank you, Chiragji. Good evening to everyone. I welcome you all to JK Tyre Q2 FY26 earnings call. I'm glad to be here, and I have with me Dr. Arun K. Bajoria ji, Director, President International, Mr. A.K. Kinra ji, Financial Advisor, and Mr. Sanjeev Agarwal ji, the CFO. At the outset, I would like to extend my heartiest greetings on the Deepavali and the festive seasons to all of you. To begin, Indian economy maintains its position as the world's fastest growing economy as it continues to demonstrate encouraging signs of growth led by resilient service export, softer crude oil prices, GST reforms, and improving trade balances. GDP in Q1 FY26 grew by an impressive 7.8% as against 7.6% in Q4 FY25, with an outlook of 6.8% for the entire year of 2026, reflecting a resilience of the Indian economy even as it faces external pressures from US tariffs and stress on trade globally. Keeping in view the above, India's long-term growth prospect appears to be strong on the back of robust macroeconomic fundamentals, buoyant domestic demand, and rising infrastructure development, which are further strengthening the India's position at the global footprint. The government, in order to boost consumption, had reduced the GST on tires from 28% to 18% and on farm tires from 18% to 5%. This GST reduction will act as a catalyst for growth across the sectors and is expected to improve the overall auto demand by 8 to 9%. JK Tyre has passed on 100% benefit of GST reduction to its customers. GST reduction lowered the total cost of ownership for the end consumers, which will lead to faster replacement of commercial vehicles on account of increase in consumption across sectors like FMCG, consumer durables, e-commerce, and core sector, which will have a positive impact on tire demand. We are already witnessing a favorable tailwind in terms of festive demand and overall improved customer sentiment. Auto sales have witnessed a robust volume growth of 10% in Q2. Segment-wise, commercial category grew by approximately 9%, two-wheeler grew by 11%, and farm by 28%. Although the passenger vehicle category witnessed a modest growth of 2%, it has now started achieving strong numbers recently. Going ahead, commercial vehicle and passenger car segment are expected to grow in the mid-single digit. Farm equipment and two-three-wheeler category are set to grow at a high single digit. This growth is led by steady replacement demand and healthy rural income. EV market is soaring along with IC vehicles, with two-wheeler and passenger cars taking the lead. This encouraging growth highlights an accelerated adoption of electric mobility in India, supported by new model launches, government incentives, and increasing consumer awareness of sustainable transportation solutions. Export vehicles greatly contributed to auto sector. In Q2 FY26, export registered a double-digit growth of more than 20% and outpaced the domestic growth on a Q&Q basis. The tire industry has been performing well and it is continuously gaining strength on a Q&Q basis. I am happy to share that JK Tyre has registered its highest ever consolidated revenue of rupees 4,026 crores, up by 10% on a Y-on-Y basis. Consolidated EBITDA for the quarter stood at rupees 536 crores with an improved margin of 13.3%. Improved operational performance is a result of higher sales volumes along with softening raw material prices apart from higher operational efficiencies. I am delighted to share that UX Royal passenger car tires has been chosen for an exclusive fitment in the newly launched Hyundai Creta Night Edition, which is a testimony of our being the most trusted mobility partner of choice with OEMs. We are amongst the few companies in India to launch an AI-powered voice bot that uses natural language processing for superior customer interaction and support. At JK Tyre, digital transformation continues to be a strategic priority and as a part of our resolve to secure organizational digital future. We are proud to share that JK Tyre has once again secured the top-notch Care Edge ESG 1+ rating, setting another benchmark in domain of sustainability. The above ESG rating demonstrates the JK Tyre leadership position achieved through proactive efforts across key environmental, social and governance themes, underpinning by comprehensive policies, advanced monitoring system and significant investment in renewable energy and decarbonization technologies. Another noticeable achievement reflecting our commitment towards environment at JK Tyre is that we have become the number one company car manufacturer to publish Environmental Product Declaration EPD on International EPD System platform for the 3 products in PCR and TBR category, enabling customers to make more informed choices and showcasing our commitment towards sustainability. With the combination of growing consumer demand and technological advancement and thrust on innovation, JK Tyre is uniquely positioned for significant growth in the coming years while expanding its presence across domestic and international markets. Now I would like to take you through some of the key operational highlights. We registered the highest ever turnover at the consolidated level with quarterly revenue at 4,026 crores, up by 10% on a Y-on-Y basis. Domestic market registered a growth of 15% in volume, driven by noticeable uptick across the segment. Export volume grew by 13% over the previous quarter, despite the uncertainty around US tariff rates. TBR volumes in numbers in the replacement market grew by 22% year-on-year basis. Passenger line volumes grew by 16% in replacement market and also export volume registered a 6% growth on a Y-on-Y basis. Farm category volume also saw a robust growth in OEM, a growth of 78%, and in replacement, a 12% growth on a Y-on-Y basis. 2-3-wheeler category volume In OE, segment grew by 155% on a Y-on-Y basis. On a quarter-on-quarter basis, raw material prices corrected by 3%. Now I would like Bajoria ji to take us through the performance of Tornel.
Thank you, MD sir. The Mexican economy continued to demonstrate resilience despite the uncertainties around U.S. tariffs. Notably, Mexico has surpassed China and Taiwan as the largest exporter to the USA during the first half of 2025. World Bank has raised the GDP growth forecast of Mexico to 0.5% for 2025 as compared to 0.2% earlier, and the projection of 2026 GDP growth stands at 1.4%, which highlights the improved confidence in the Mexican economy. Bank of Mexico has further cut the benchmark interest policy rate to 7.75% in this quarter, which will improve consumer sentiment for overall economic growth. I would like to highlight that in quarter 2, JK Tornel has achieved the highest ever sales compared to last 6 quarters. Domestic PCR and TBR sales hit their record highs in this quarter, and we are focusing to further increase these numbers in the coming quarters. Higher sales was achieved through better market coverage, increase in sales to mass merchandisers, and focused sales approach in Brazil and Latin America markets. Exports to USA remained steady despite uncertainties of USA tariffs. Sales have bounced back to rupees 639 crores as against rupees 505 crores in previous quarter, a jump of 26%, thereby reflecting our relentless focus and concerted efforts to increase the top line. JK Tornel's EBITDA for Q2 grew nearly fivefold, reaching rupees 49 crores as compared to rupees 10 crores in the previous quarter. EBITDA margins rebounded to previous levels and stood at 7.6%, reflecting an expansion of 560 basis points sequentially. Further, PBT and PAT stood at rupees 25 crores and rupees 15 crores, both up significantly over the last quarter. Further, the United States-Mexico-Canada Agreement, USMCA, is due for revision in 2026, and we are watchful for the same, as it remains highly crucial to maintain trade relations and diplomatic ties with USA. Now I would request Mr. Sanjay Agarwalji to talk about the financial performance of JK Tyre for the second quarter of financial year 26. Thank you.
Thank you, sir. Thank you very much. And I would like to brief you all the key highlights for quarter 2 of financial year 26. The first one is consolidated revenues for Q2 FY26 were recorded at the highest ever level in a quarter at rupees 4,026 crore, which is up by 10% on YY basis, as against 3,643 crore in the corresponding quarter. Consolidated EBITDA for Q2 was recorded at rupees 536 crore as compared to rupees 443 crore in Q2 FY25, which is an increase of 21% on YY basis. EBITDA improved by 26% over the previous quarter. EBITDA margins during the quarter were recorded at 13.3% versus 10.9% in Q1, representing an improvement of 240 basis points over the previous quarter. Cash profits for the quarter stood at rupees 428 crore, which is up by 38% on Q-on-Q basis and 33% on YY basis. Profit after tax for the quarter stood at rupees 223 crore, which is up by 54% on year-on-year basis. Capacity utilization for the quarter was 88% on consolidated basis. Radial capacities utilization continues to remain above 90%. Exports in Q2 grew by 10% value-wise sequentially despite the tariff-related challenges. Both the subsidiaries, Cavendish and JK Tornel Mexico, witnessed robust performance in this quarter and added significantly to the overall financials of the company. Consolidated EPS in Q2 improved to rupees 8.08 as against 6.03 per share in Q1. Return ratios have been improving continuously. ROCEs and ROEs have remained robust in Q2. Net debt as on 30th of September stood at rupees 4,201 crore as compared to rupees 3,862 crore as on 30th of June 25, which is up by 339 crore, which is mainly on account of increase in working capital requirement for carrying higher inventories of finished goods. On the other hand, gross debt increased by 243 crore. This is mainly the funds have also been utilized, the funds which were available with the company have been utilized for the purpose of the projects implementation which are underway. The balance sheet of the company continues to remain healthy, and as I said earlier, the robust key financial ratios, leverage ratios, net debt to equity at a level of 0.75 and net debt to EBITDA at 2.5 multiple as on 30th of September. So regarding the merger one update, we are just nearing the final hearing date, which is scheduled for tomorrow. And this is the final hearing with NCLT Jaipur, and we are expecting the merger to be completed in all respects in terms of the effectiveness by end of November 2025, which will bring us a lot of synergies in terms of the merged entity, and we will keep you informed about the benefits which we are gaining out of this merged entity. Thank you so much. So we now open the forum for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Basudev Banerjee from CLSA. Please go ahead.
Yeah, thanks. Congrats for a good set of numbers. Just few questions, sir. First question for Sanjeev ji. Sir, from the cash flow statement, almost 610 crore of capex in first half. And as you said, working capital increased this quarter. And that's how one can see gross debt more or less to have remained unchanged. So what is the outlook for full year capex, and how do you see the working capital normalization in coming quarters so that one can see a good FCF generation in second half?
Yes, thank you. So this is regarding the total cash available, what we have incurred so far in the first half, which is about 610 crore rupees. And almost the equal number, which is about 600 crore rupees roughly, is going to be spent in the second half as we receive machines for the projects which are under implementation. So 1,200 crore rupees of the total capex outlay is scheduled for this year. And this includes, of course, some amount towards the normal maintenance capex as well. And as far as the working capital is concerned, this was intentional addition to the finished goods because we wanted to be ready for the festive season. So there was an addition of some finished goods for the preparedness towards the festive season. But I think now this working capital overall reduction would be there, and we are hoping that with this reduction, working capital will come back to the normal levels.
And sir, can you give some breakup of the growth capex, which segments you are investing in using this 1,200 crore?
Yes, so we have been, as you are aware, we have been implementing at the moment 3 projects. One is for the passenger car radial, which is for 1,025 crore at our Banmore unit, which is near Gwalior. The second expansion which is going on is for Luxor tire plant, and this is for TBR tires, and this is 261 crore. And the third one is 112 crore rupees for the light truck radial tires, all steel light truck radial tires, which is going on at Bikran tire plant. So these 3 projects put together will come up for production in the quarter 3. And the ramp up will slowly happen to the level of the highest level of 90 to 100 over the next 6 months period.
Sure. And overall utilization as of now would be what, close to 85%?
So this is more than 90% for the radial categories where we are expanding, and this is going on very well in fact.
Sure. So, second question is, as you mentioned, raw mat basket was down 3% QOQ, and one can see that natural rubber prices are down to some 185 rupees a kg from 205 sometime in August. So, how do you see in the December-March quarter, other than the crude price correction which is pushing up the margin now, the natural rubber price correction should aid margin improvement further? Any comments on that?
Yes. Yes. So we see that the raw material price is going to be range bound in the coming quarters, and definitely it will help us in the margin expansion.
Sure. And last question: has there been any segment replacement market price cut to pass on the raw mat reduction in last quarter?
No, there has been no price revision.
Okay, sir. Thanks. That's all from my side.
Thank you. Thank you.
Thank you. The next question is from the line of Rehan Sayyad from Trinetra Asset Managers. Please go ahead.
Hello. Am I audible?
Yes.
Hello.
Yes.
Good afternoon to the team, and thank you for giving me the opportunity. I have only one question. I want to understand regarding the export side. So your export grew 13% quarter on quarter despite a US tariff uncertainty. So, I want to understand what is your plan B in case tariff stance wasn't in current year 26, and are you reallocating volumes to alternate geographies or increasing product mix of higher margin SKUs to offset any impact? What was the management view on this? Could you please explain?
You see the export at large grew. Here our export to the highest tariff country, which is USA, we have a total 3% exposure from the total revenue to the USA, that we have successfully diverted to other countries where we are already participating. So namely Mexico, Latin America, Brazil, we have been able to sort of divert, and our strong markets being Middle East and even Southeast Asia, which we are exporting. And we are also exploring new markets like EU and UK and even Africa. So that will be our continuous focus on those lines.
Okay. So, like, do you think it will compress upper margin in anyhow if you do this thing?
No, it will not impact impact our margins. If at all, it will improve our margins.
Okay. Okay. And
Additionally,
okay.
just to clarify that because we have already diverted a lot of our exports which were going earlier to US markets. So as I mentioned, so we are now, once this agreement is there in place between India and US, that will be additional opportunity for us to export to that market.
Okay. Okay, fair enough. And like last one keeping question I want to ask, like, could you please give any guidance of EBITDA margin that you can sustain over the next 2 to 3 quarters?
You're talking about the margin. So margin is also going to be in the range of 13 to 15%, and which we will be able to achieve.
Okay. Okay, that's it so much, sir, and thank you, and good luck for the coming quarter.
Thank you. Thank you.
Thank you. The next question is from the line of Abhishek Kumar Jain from Alpha Accurate. Please go ahead.
Thanks for the opportunity and congrats for a strong set of performance. Sir, my first question on the Mexico business. So what was the average realization in terms of the rupee versus Mexican peso in this quarter? And now that rupee versus Mexican peso has moved at around 4.8 per INR in last 2-3 months, which is very much positive for your company. We just wanted to understand what benefit you will get because of this currency movement.
So here, in terms of rupees, we are our revenue growth has been 26% on a quarter-on-quarter basis, and in terms of our constant currency, we to the Mexican peso has been 20% on a quarter-on-quarter basis. And we have seen that the depreciation of rupee to Mexican peso has been 7% on a quarter-on-quarter basis.
Okay, so what was the average realization there?
Sorry, the realization?
Average realization, rupee versus Mexican peso.
No, average realization, because there are number of SKUs, number of products, so this is not possible, but definitely it has gone up. And we have taken the benefit of depreciation of rupee. And going forward also, if this continues, then I think we will gain it further.
Okay. And how is the demand scenario there in domestic and exports on both?
Yeah, it's very good. It's improving further. You see, we are expecting that the Mexican exports to USA should be better because they are now going to conclude a deal. And as I had mentioned in my opening, this US, Mexico and Canada agreement. So we are hoping that going forward, we will be able to maintain and improve our sales as well as our margins.
And adding to that, our push within Mexico and Brazil and LATAM, which we are exporting from Mexico, we are expanding in terms of our white spaces and our channel partners as well. So we see a good opportunity in terms of higher demand coming in from these countries.
Okay. So what sort of the run rate we can see in the Mexican business in the coming quarters? We have seen very good growth in this quarter and 8% YoY growth. But if you see the past numbers, then we were doing around 700 crores kind of the revenue from the Mexico in the one and a half years back. So can we able to achieve that number, sir?
No, we see a continuous growth because we are, as I told you and Bajuri ji said, that we are finding newer markets, opportunities to expand our dealer base and find white spaces in Mexico and exporting countries from Mexico. We are also enlarging our offerings of development of newer products. We see a good growth coming in and healthy growth for the year also coming in.
Okay. And my next question is on the domestic side, where we have seen very strong growth in the replacement business that has gone up by around 28% Y-on-Y in this quarter. And basically, TVR replacement demand was very much strong. So what are the green shoots visible in the TVR replacement segment and how it will be sustainable?
So we have seen a comeback of OE as well in the CV segment, which was muted. We see that and we understand that in the replacement market right now, the inventories which the dealers were carrying in terms of tires, that has been flushed out. And thanks to GST, it has brought a lot of demand surge there. And we see with the better monsoon and we see with the better infrastructure push by the government and clubbed with rural demand coming in, so we see a very positive trajectory of demand. So that is all argues well in terms of our demand for our truck radial tires. So going forward, we see overall all categories should do well in the replacement as well. So in the overall TVR business, how much contribution of LCVs in your segment? So you said about the LCV. Yeah. So our CV segment contributes almost around 60% of it. Okay. Yeah. And how much contribution of the LCV in overall revenue?
So overall, the 60% is the commercial vehicle, as MD sir said, and out of which LCV, SCV, then of course MSCV, there are various segments which are there. So we don't have the ready number at the moment, but we can provide it separately.
And how is the mix in the TVR versus TBB?
So LCV non-truck, which also contributes, has farm also, it will contribute somewhere around 12 to 13% in our mix.
Oh. Thanks, sir. And how is the mix TVR versus TBB?
So TBR is almost around 40 to 45%, and TBB would be around in the range of about 10 to 13%.
Thank you, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Aditya Khani from Shah Capital. Please go ahead.
Thanks for the opportunity. Two questions from my side. I wanted to understand BU and category mix of India operations for Q2 FY26.
Could you repeat the question, please?
I wanted to understand BU and category mix of Q2 FY26 of India operations.
So the category mix here would be in terms of
category segment.
So that would be in terms of value, 43% would be in the 57% would be in the truck space. Around 30% would be passenger line radial, and about non-truck bias would be about 10%. Mix. This is the mix.
Okay, and BU mix?
Sorry?
And BU mix, market mix? Replacement, OEM and
So replacement is 60%, OE is about 30%, and our export would be about 14%.
60, 30 and 14.
60, 26, 27% OEM and 14% export.
Okay. And standalone number shows drop of 173 crore versus quarter one, while India revenue has moved up by 63 crore in same period. Can you throw some light on Cavendish performance?
No, so this is overall you are talking about between the two entities you are saying or India operations?
If I compare Q2 versus Q1, standalone number has drop of 173 crore, while if I see segmental performance in consolidated statement.
There is no specific reason between the two quarters. For some reason, let's say if the demand for the product from the OEM for JK tires is higher, or it could be, let's say, in some quarter it could be higher for the CIL tires. And in order to remove this kind of confusion, this entity will get merged, let's say, by the next quarter, and there will be only one segment, one company to cater to. So this depends upon the OEM requirements to be catered to from which company. For us, it is the same. That is why I'm saying that India operations versus JK Tyre and CIL, you are asking, or India operations. For us, it is one and the same thing, India operations.
Okay. Thank you.
Thank you. The next question is from the line of Krish Jain from NAFA Asset Managers. Please go ahead.
Yes. Thank you for the opportunity and congratulations on a good quarter. My question is regarding JK Tornel. I wanted to understand what is the capacity right now and what is the capacity utilization as well.
The capacity is around 59 lakh tires, and the utilization overall, including the radial and the bias, would be in the range of about 80%, but the radial utilization is higher at nearly 88% in JK Tornel, Mexico.
Okay. And in the next round of capex, how much will this capacity increase by?
It will increase by around about 15%.
Absolutely.
And this is all for passenger car radial, right, sir?
Radial, that's correct.
Totally.
Okay. And this will be online by December of this year?
No, it will be online from April 26.
Okay. Thank you.
Quarter 4.
26.
Yeah, 26. Quarter 4, 26.
Okay.
Thank you. The next question is from the line of Puneet Zaveri from Zaveri and Companies. Please go ahead.
Yes, thanks so much for the opportunity. Just want to understand from, because of GST rate cuts, what has been the market share gains for you in any of the segments, especially regarding OEs in OEMs? Have you seen an increase in market share, especially for passenger car? Could you give us some perspective?
Yeah, sure. So GST has definitely provided a lot of cheers to our tire segment, but particularly JK Tyre has really gained, and our share of business in the OEMs, particularly in the CV, is the highest. There we have seen and we are seeing a good pull from the vehicle manufacturer, and also we are seeing a good traction coming in from the replacement as well. So we see this segment to do well in the coming quarters. We are out of the monsoon as well, and there's a lot of infrastructure push and rural demand coming in our way. In the passenger car as well, there has been a good traction in the entry-level vehicle where we are also participating, and so that has seen the numbers also overall in the PLT go up, and also we see that there is a good demand which is coming in for the passenger as well in the replacement market. So it argues well in both the CV and passenger car, and plus we are seeing the farm segment also coming in. So there also we are likely to get good traction. In the passenger as well, we have seen a good mix, which we are very much focusing in terms of higher rim sizes, and that is 16-inch and above. That is the premiumization. There also we have seen a good mixed traction coming in from both OE and replacement.
And is there any kind of quantification that you can give for the market share gain in these segments? Anything on passenger cars as well as CVs that you can provide right now?
So we don't really quote any market share, but definitely our volumes have grown, and we are definitely have gained markets.
Just to give you an idea, in the replacement market, Anshumanji mentioned earlier that in TBR we have grown in the last quarter by 22%, and in passenger car by 16%. So I think the market, this is more than the market growth rate. So you can imagine that our market share has really gone up.
And just one clarification, you mentioned about the capacity at JK Tornel. Could you just repeat the number, please? I missed that number.
The capacity I had mentioned was 59 lakh tires.
Oh. All right. Thanks so much for answering the questions, and all the best.
58.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Mitul Shah from DAM Capital. Please go ahead.
Yes, thank you for the opportunity, and congratulations for a really great sequential improvement on top line as well as margin. So one clarification that as per presentation, if I do the OEM calculation, it is showing double-digit decline, whereas this Q2 OEM production seems to be quite strong. So anything I'm missing out, or is it because of the Tornel replacement increasing? So how one should read about this?
In which segment, Mitul, you are saying?
OEM. The OEM segment, if I do the PPT calculation of you have indicated
So
about
because I think in number terms, if you see OEM overall, we are talking about the overall increase in all the segments put together has gone up, because there is a significant increase in the truck and tractor tires sale with OEM, and also in two-wheeler and three-wheeler. And because if you compare the OEM numbers in terms of rupees crores, this is 2% approximately. This is almost flat, but this mainly on account of the two-wheeler and three-wheeler and the tractor. There has been some increase.
So overall OEM volume more or less flattish, we can say, or there is a because revenue decline is coming 11%.
When you compare the overall volumes you are talking about, then it is not comparable, no? In some segment it may have gone down, in some segment it may have gone up. So that is why I'm saying segment wise we'll have to see.
So revenue wise, as per your calculations, sir, what is it a growth? If I take only revenue.
No, in terms of the overall volume, we have grown by 43% on volume in the OEM.
It's coming 11% decline as per presentation.
Just you do one thing. You do only exclusion of the two-wheeler and three-wheeler segment and two-wheeler and three-wheeler. With two-wheeler and three-wheeler, if you see, then OEM is almost like 43% increase.
Okay, understood, sir.
And if it is volume of two-wheeler and three-wheeler is not taken into account, because there is a very significant increase in two-wheeler, three-wheeler. So OE has increase in volumes by almost about 4 to 5%.
Okay. And sir, second question on the Tornel side, that there is a decent YOY growth. Even if we adjust for the currency, there is some growth on the revenue side. But margin improvement on a YOY basis, it's a contraction. So anything to do with the raw material, or we having previous quarters high value inventory of the commodities, or anything on the other expense side margin?
That I think, Mitulji, there is a very small variation between the 2 quarter on YOY basis, and that is because I would tell you, this is the trading component difference. So last year the trading was slightly lower and slightly it is more this in this quarter, right? Although the margins are not very different, this is between 7 to 8% range only, but last year and this year.
Okay. So last question on the India operation side. In FY24, we really gained market share and outperformed strongly to the peers. But since last 5-6 quarters, if I take the India operations revenue growth, it seems to be underperformance versus industry as well as peer group. So any market share loss one should think of, or it is a product mix related challenge or anything else? And what is the strategy to rectify that going forward? This is the last question, sir.
No, but I don't think there is anything like that. We have said that 15% volume growth in the domestic market is already there. So where is the question of any contraction in terms of the volumes?
So if I take the revenue growth of India operations, which you have mentioned in all the results, that is coming much lower than the are reporting for the India domestic business. So is it like a commercial vehicle not doing great and we are stronger on the commercial vehicle side? So that is like a product mix impact or market share, or that is a question.
Mainly because of the PCR. In PCR, as you are aware, the selling prices are linked to the increase or decrease in the raw material prices. So that adjustment might have reduced the slight number on account of the value.
Understood, sir.
But
so
on
great,
a
sir.
year-on-year basis, on net revenue India operation, it has grown by 10%.
Yeah, it is slightly lower than the peers in earlier quarters. That was a question basically. But understood the point.
Peer comparison, I don't think we will be able to compare. In 2-3-wheeler prices might have gone up, or some other segment prices. Where
so that is like product mix might be the
product mix. A product mix difference could be there, so it is not so strict. So comparison, we are not actually seeing the comparison with other companies, and in any case, it's only 1 or 2 companies which have declared the results for this quarter.
And adding to Sanjeev ji, I must mention that OEM in the CV, it is right now only picked up in this quarter 2, where we are very strong. So this previous or corresponding quarters, they were not as bullish in terms of their production. So
yeah, right. That is, I think, right analysis or understanding that because of the commercial vehicle, which might have a slight impact on overall industry, and that has impacted. Great, sir, and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes.
Hello. Yeah, firstly, congratulations on the 400 crore top line. My question is on the revenue. So do we, what sort of guidance do you have for the second half of this year and also for the next financial year on the revenue?
So as I was addressing the other investors, that we see a good trajectory of demand our way. So we are very confident that we will be able to do a double-digit 10% growth on the revenue going forward.
And that is great to hear. And secondly, you previously mentioned on the 3 capex projects we were working on. Could you please mention them again with the amount of capex that we are investing in them?
Yeah, sure. So a total of 1,400 crores layout of our expansion, TBR, which is the truck radial tire, which we are expanding in Luxor, CIL, with the 261 crores. All steel light truck radial, which we are expanding in Mysore, rupees 112 crores. And passenger expansion, which is of 1,025 crores, which is happening in our Banmore. So we should see these starting production from end quarter 3 FY26 and ramping up to next year.
That is great. And this does not include the $24 million for the Mexico CapEx that we are doing on PCI, correct?
No, that is separate. That is separate.
That is separate. Okay. And that is going online from the fourth quarter of, or the first quarter of next year?
Yes, that is right.
Yeah, that's it from my side. Thank you, Nozbas.
Thank you.
Thank you. The next question is from the line of Nandan Pradhan from MK Global. Please go ahead.
Hello. Good evening. Am I audible?
Yeah.
Yeah. Good evening, sir. And congratulations on a great set of numbers for this quarter. So, just a small question from my side. So, in Q1, we had expected the tire industry to grow by about 7 or 8% for the full year. And we've already sustained our own guidance of double-digit revenue growth for FY26. So, because of the recent GST cut and the festive surge that is going on, do you see any uptick in the guidance, or would you sustain the same as the last quarter? That's it.
No, very much so. We would stick to our numbers in terms of our guidance of this 10%. We are seeing a good surge coming in. So, I'm sure this momentum will carry on. But we will stick to the numbers which we have set.
In the previous question, you answered that.
Hello?
Yes, sir. Thank you so much. That answers my question. Have a good day. Thank you.
Thank you. The next question is from the line of SB Bhaiya as an individual investor.
Hello, sir. Congratulations to you for a nice set of numbers. I've got only one question. With such a robust demand scenario which you have painted, how prepared you are from supply side till the time actually your new capacity comes in?
So here we are putting up capacity, as I said in the previous response. So here our capacities are coming in different time lags, PCR and TBR. So these capacities together will inch our capacities to 14 to 15%, and there we will be able to cater to our increased demand.
But as I understand, your capacities, the new capacities are coming in only in the last quarter of this financial year or first quarter of next financial year. So till that time, do you think you will be able to meet with the demand, the surge in the demand?
No, this we have mentioned earlier that the capacities for PCR, TBR and all steel light truck radial tires are coming in India in the third quarter. And in fact, the PCR capacity has already started in the month of October, but the ramp up will happen by March. So, and for all the products. So we are fully geared up to take up any requirement, any surge in demand, and we are ready. We will be able to supply. We will not let any loss of sales on account of the capacities shortage. So this is definitely will get addressed. And as far as the tunnel is concerned, we will be ready by the fourth quarter of this financial year. But in between also, when we start with smaller capacities, and then of course full ramp up happen over a period of 3 to 6 months depending upon the product.
Plus capacity utilization is increasing.
Yeah, so the capacity utilization is also possible in tunnel because we are already operating at about 80-85% capacity. 88%. So that there is a scope to cater to that.
Great, sir. So you are not seeing capacity as a constraint to meet with the increased demand?
Absolutely.
Okay. Thank you, sir.
Thank you.
Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
No, so thank you so much for joining this call as usual, and we are quite happy to have shared all the numbers and all the questions have been fully addressed. So thank you very much for this, and look forward to the next call. Thank you so much. Website.
On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.